tongue could open up. I sold my soul a good price, out of sight. And my whole got tired.
Good morning, guys, and welcome to another episode of Scott on Crypto. Now, I'm not going to lie and say today is going to be the most exciting episode that I've ever given you guys. It's about candlestick patterns. Now, whilst it's not very exciting, it's extremely important to your everyday trading, whether you're day trading, swing trading. They're very important. They really do show huge, significant changes in the trend, and I want you guys to be able to spot them and then trade effectively using them. So, before we get stuck into the main different variations of the candles, which there are hundreds by the way, but today I'm going to show you the sort of 13 most significant ones for me, how I trade them, but do go off. There are a lot more resources on the internet that show you hundreds of different variations, but as I say, these for me are the most significant, the ones that are going to help you guys the most. So a brief introduction to a candlestick. We'll just use this one on our chart here. What a candlestick does, it shows is the open and the close of the price action within that time frame, whether it's a 5-minute time frame, 15-minute, an hour, 4-hour, or a daily, whatever time frame it is. So on a green candlestick here, because obviously the price action has moved up, the open was here at the bottom of the body, and the close is here at the top of the body. Now the wicks show you where the price action has been over the course of that time frame. So if you can imagine here, the price action opened here at the bottom. Now it may have moved down, which has created this shadow, which has basically left a trail in where the price action has been. It's then moved up. It may have gone as high as here, which is where the wick is this high, then it's come back down, and then it's finally closed here. So the body shows the open and the close. The wick shows where the price action has been, and it's left a trail. Now, I may be wrong. When I opened, the price action may have shot back up to here. It may have gone all the way down to the bottom wick here, and then eventually closed here. So the timeline of events in which caused that candlestick to form is irrelevant in a sense, but you can spot that on a lower time frame the lower you go. But in essence, an open, a close, and it's left a shadow where it's moved, which does tell us a story. And much the same with a red candlestick. So obviously this price action has moved down over the course of the time frame. So the open would have been at the top of the body, the close is at the bottom of the body, which obviously has given it a red in colour. And again, the wicks showing you where the price action has actually been over the course of that time frame. So with that in mind, let's get stuck in. So a Doji candlestick is my number one here on the list to start. These two candlesticks here are Dojis. Now, what a Doji is a very thin body. Now that shows that the open and close price within that time frame are almost identical and very, very little between them. Now that shows indecision in the market and a tug of war between the bulls and the bears. The bulls being trying to push the price up, the bears trying to pull the price down. So as I say, because the bulls and the bears are in a tug of war, neither of them have won. It's been a draw in essence. We've ended up with almost hardly any change in the price action over the course of that time frame. However, the wicks do tell us a story. Now in this Doji here, we have equidistant wicks away from the body, which shows that the price didn't really move up much, the price didn't move down much, so therefore that tug of war between the bull and the bears was a very, very equal fight. Now we'll move on to what this one here means in just a moment. So moving on, this is the Dragonfly Doji. Now once again, the body is very thin, which gives its Doji name. It's very, the price action has hardly moved. It's been very indecisive. However, looking at where the price has been, now this wick here tells a story. The wick shows that the price action was once a big red candlestick all the way down here, very red bearish candlestick. However, the bulls defended the price and they brought it all the way back up to here, even a little bit higher, and then the bears defended it back to level playing field once again. So what that shows me is that this candle wick here is a rejection of the lower price. So that showed me that the bulls are here, they're fighting for this price, so therefore they're rejecting at this level, and that shows that the bulls are strong, and that shows a rejection of this downtrend and now a reversal into an uptrend. So this would in essence be a reversal pattern into an uptrend. Now, much the same, but an opposite of this, is an evening star doji. Now, an evening star doji is here. Once again, very thin body, wicks here showing bullish and bearish tug of war, but this comes at, again, a reversal pattern, but this time bearish. So you can see here that the open and close of the body has actually jumped from the close here of the previous candlestick. So it's jumped up, but however the price has been rejected above and below, but it's created this evening star, which has then formed this red bearish candlestick afterwards, and therefore there's been a change in trend. Okay, now the Harambee Cross. Now this is another version of where you see a candlestick jump. So this is Harambee Cross just here. This is where you see there's been a bearish trend down to here. Now on the next candle you can spot here that the candle has closed here, the bottom of this body. However, the opening of the next candle has immediately jumped higher than the close. So normally we would see a candlestick open on the same level, much as we do here, much as we do here, and much as we do here. But this one has jumped. So it's had a bullish jump. There has then been a doji occur, which shows that sort of indecisive tug of war between the bulls and the bears. However, that jump in price shows the bulls are there, they're defending their price, and they have basically come into force. So then followed by a green bullish candlestick shows once again a reversal pattern. As you can see here, this chart then rallied up. Now the morning star, this is the next doji we're going to talk about. A lot of dojis, guys, I know. So this morning star pattern here again shows a reversal pattern. So you can see the price action coming down here, which is bearish. You can see the candlesticks here are getting thinner and thinner, which shows indecision, which shows that the bulls are turning up, they're fighting the bears harder. There's a much larger tug of war game going on here. They're defending this price action, and then all of a sudden, as I say, once again, this price has jumped from the close of this body. So once again, as we said in the last video, whereas you would normally see a candle open and close on the same level as the previous candle, this candle has jumped up from the close of this price action and has then continued on to rally, and that has been a change in trend. So if you spot either of these, morning star or evening star, this being the evening star, obviously an evening star high in the sky, that is then bringing the price action down, and then the morning star rising like a sunrise is then bringing the price action up. So that's how to remember those guys. Now, let's have a little bit of an introduction to long wicks. Now, as I mentioned earlier on the Dragonfly doji, long wicks do tell a story, and wicks are very important when it comes to reading our candlesticks. So wicks show a rejection in price. So basically, once upon a time, this candlestick here, due to we can see this wick, would have been a big bullish green candlestick. So part of the way through this time frame, before the candle closed, you'd have seen this all green bar. This would have looked extremely bullish. However, you can see the bears turned up here. They thought you're not coming any higher, and they actually pushed this price action all the way down, even down below the opening of the candle, and down, and it actually closed as a red bearish candle. This shows a huge price rejection of the upside, and therefore showed an indication that the price needs to move down even further. Now, as you can see here, this is the opposite. This candle here would have, when it opened at this level here, would have actually showed once upon a time a fully bearish red candle all the way down here. Now, this is where the bulls turned up in this area down here and said, you're not coming any lower. They fought for the price all the way back up and actually pushed it into a green bullish candle. That showed a rejection of this price range, and therefore it changed the trend, and we rallied back up. So once again, in summary, the wicks show a rejection of the price range in which they are sort of jumping into. So keep that in mind. And that brings us on to the hammer. Now, the hammer, once again, shows a rejection of this price range here. So the long wick signifying a rejection of the price, the bulls have turned up and they're wanting to push it higher. So once again, look out for that long wick. Despite the fact this is actually turned into a red bearish candle, this wick shows us everything we need to know. It's a very small body, which shows the price actually hasn't moved much at all, and we've got a really long body. Now this would have actually been, if you look at our Dragonfly Doji here, it's very similar. The only thing that's happened on this Dragonfly Doji is that the price has moved up a little bit more and has closed this body really thin. Now looking at the hammer, the difference really between them is that we haven't quite closed just enough, but still a very bullish signal, and as you see here, a trend reversal bullish. Okay, so now the inverted hammer. This is much the same, apart from this is a little bit different in regards to how the body closes. Now, usually we would say on this type of form of candlestick, this almost looks bearish because you see the wick has a rejection of the price above. However, this one's a little different because if you look closer, the body of the candle has actually ended up green, which is bullish. So what that shows is that the price action was actually opened down here. It jumped down from the previous candle. It jumped bearish. So we actually had a price action which started to move down. We did push higher, and yet there was a small rejection to the upside, but we still finished green, which still finishes bullish. So not always is the wick of the candle showing a rejection, so therefore we're immediately bearish or we're heading in that direction. This one, because it's still closed bullish, and this is a fairly small wick here in regards to how long wicks can be. For example here, it's not overly long. This doesn't show a large enough rejection. It's fairly bullish, and therefore it's an inverted hammer, and we continue up. Okay, now the hanging man. Now the hanging man is again a hammer in essence, but this one signifies a change in trend. So the hanging man here, as you can see, signified, it looks like a man that's hanging, basically, to, you know, it is what it is. It shows here the body of a candle. It's opening on the level here of the previous candle. It's gone lower to almost show that the bearish trend is continuing. However, much the same as we spoke about before, the bulls have turned up, they've defended their price action, they've even pushed the candle into a green body, and therefore this shows a trend reversal and a continue to the upside. Now, you get all the way down here, we have another hanging man here. This once again shows that after the bearish push down here, we have another rejection of the downside, and then we almost level off, and now we continue probably to the upside from there on. Moving on, a shooting star. So once again, this shooting star here is showing a rejection of the upside, actually eventually coming down, pushing the body of the candle bearish. So we have a red body here to the candle, rejection to the upside, change of direction of the trend from bulls to the bears, and we push all the way down. So as you can see, rejection to the upside, red forming candle. Now, engulfing patterns. Engulfing patterns are probably the most reliable candlestick pattern that I find that I can trade. Now, what an engulfing pattern is that basically you have a candlestick body which is so large it engulfs the previous candles before it. Now, the number of candles it engulfs or it swallows up before it shows the more bullish or bearish that candle is. So this big green bullish candle here has not only swallowed up the whole of the body of the bearish candle before it, but it has this candle here, this candle here, this candle here, and almost this candle here. So it's actually swallowed up this whole section of bearish momentum here, which shows very bullish. It shows the bulls have turned up and they want to push to the upside. So as you can see from there, we continued all the way up. Now, much in the way this engulfing bullish candle, of course, it can be the other way around with bears. So as you can see here, this big, large bearish candlestick has formed, and it has swallowed up the bodies of 1, 2, 3, 4, 5, 6, 7 candles before it. This one is almost in line, but even another 3 or 4 before here. So this is a very bearish signal that we're going to push down. Now we don't immediately at the end of this candle head straight down. As you can see, there's a little bit of a consolidation here to the upside, but the eventual trend is all the way down. So as soon as you see that engulfing candlestick, wait until it closes, because if this you had traded on this engulfing bearish candle here, and you have shorted the market, we're going to move downwards, but the candle hadn't actually closed, this price action could have moved back up, we could have formed a rejection to the downside, and we could have actually signaled a move to the upside. So wait until this candle closes, because if the bulls had have turned up here and have pushed this body of this candle up, you could have actually mistakenly shorted the market when we could have moved up. So always wait for the candle to close. Okay, now finally, the most confusing of all candlesticks, the spinning top. Now this one is basically, as you can see here, very similar to a doji, but you have a small body to it. So you've got the equidistant wicks forming either side of the body. You have a small body which doesn't really show much of a price movement either way, much of a momentum. It's a tug of war between the bulls and the bears. It's an equal fight, it's almost a draw, and you're not really going to know what's happening until the next candlestick forms, and then we can identify that candlestick and we can see which way the price direction is going. So what you want to do is, after the spinning top, you want to look out for any of these candlesticks here, seeing what's coming next, and almost skip a beat. So okay guys, that is my brief overview of candlestick patterns. Now I hope you found that informative, and that's going to help you with your trading. What I would recommend you do is, whether you rewatch the video and you make some notes, or hopefully you've already made some notes, what I like to do is I just make a little cheat sheet for myself of what each candlestick means, or I did at the beginning when I started trading. I can then look through, if I see a candlestick form and I'm not quite sure what that means, I can have a quick look at my cheat sheet and see what's going on, and I know which way I can move from there. However, I promise you guys, after a lot of practice and trading, you will become accustomed with nearly all of them. But as I say, wait for that candlestick to close, because if the candlestick hasn't closed, you haven't got a fully formed candlestick. So much in the way as we talk about the wicks and the rejections to the upside or the downside, you can actually have a full engulfing bearish or bullish candlestick, and then by the end of the time the candle has closed, that price action has moved, and you actually have something like a hammer or even a hanging man. So wait for the candle to close. That's my number one piece of advice from this video, to be honest, and then you can move on from there. Now if you have any questions in regards to any of those patterns, or you have another pattern in which you've spotted whilst trading which has confused you, then pop it in the comment section below, or send me a tweet on Twitter, or give me an email. All those details are in the description below. So thanks for watching, guys. Once again, if you like the content, give me a like on my video, I'd really appreciate it, and subscribe to the page, and you will get a notification every single time I give you guys a new piece of material. Okay, good luck trading. As I say, please do take notes so you can spot these, because they really are invaluable to your trading, especially if you're day trading. Okay, so have a good day, guys, and see you all soon.